today we are in a situation. You didn't have, derivatives trading was very new. You didn't have hundreds of ounces of paper contracts for each ounce of real deliverable silver. The potential to blast past that 1980 peak of 14 exists. So if you're at 73 and it goes to 10, you got 7.3 times the return on silver that you would get at gold, and gold doubling that. I mean, the potential here for silver is just enormous.
Silver's surge in 2025 isn't just another market rally, it's a turning point. Prices have blasted into new record territory, industrial demand is exploding, and physical inventories around the world are collapsing faster than analysts expected. Something big is happening beneath the surface, and according to Mike Maloney, this may be the moment silver investors have been preparing for. What looks like a simple price spike is actually the beginning of a structural shift, one driven by tightening supply, accelerating global demand, and a financial system under mounting stress. If you've ever wondered what triggers a historic breakout in precious metals, this could be it. Stay with me, because the next few minutes may completely reshape how you see the future of silver.
First of all, this is from the end of last month, but take a look at the little cup and handle there. Right. So we've made a cup and handle that we've broken. And then there's a bigger cup and handle that goes from 2011 that we broke a while ago. And then there's the 45-year cup and handle that goes back to 1980 that I'm pretty sure I was the first one to identify. But and we've broken out on that one as well. So these patterns, if you look at how they fulfill, it's a powerful pattern. And the one that's 45 years old, there is a lot of upside technically. If you're a technical analyst, you're coming up with silver prices that are rather breathtaking. So he's got a target of $85 in a matter of 3 to 4 weeks. It could even be higher than that. I don't know. But in one of our last videos, or a video that I did, I guess, maybe it was a video that both of us did, I compared the bull market of the 70s and showed how it went up and then it broke out right at the end of November. It went up, it paused, and then it broke out at the end of November. And then that increase showed that we should be in triple digit silver. And I suggested maybe what we need to do is just move the decimal point one place to the right. I just want to point out how inexpensive silver is when you do this, when you adjust it for the CPI. Look at how high that 1980 peak is compared to where we are today. And that is adjusted for the CPI. We know that the way they calculate the CPI is a lie. They were trying to modify the original version that ran from the end of World War II until 1982. And the truth lies somewhere in the middle. But the fact that this is broken out, and then look at the inflation adjusted cup and handle again, the 45-year cup and handle. Once this exceeds the 2011 high and this cup and handle fulfills, then we've got some real fireworks again. So The fireworks haven't even started yet. We've only lit the fuse. Alistair McLeod is somebody that I've got great respect for. He's a wonderful analyst. He's a great writer, and he's dedicated his entire life to this. He's one of the people that has been in it for years and years and years. So he might go back further than I do in this. There are so many Johnny-come-latelys now that have just jumped on this because it's really getting going and ramping up. But Alistair is somebody that has seen it all. And so I think that he is right here, that it might be not be the entire derivatives business, because Wall Street is always going to try and game the system and change everything into a fractional reserve scheme.
Smart Silver Stacker, that's a mouthful, says the gold to silver ratio continues to drop like a stone. Silver's time has come. And look at this. He's got a wedge formation and the gold silver ratio is dropping through, which of course means that silver has been outperforming gold lately over this period.
Right. And it's in the 70s right now, I believe. And, it was I made some large purchases during COVID when it was up.
The 2025 market has finally exposed what Mike Maloney has warned about for years. The world is running into a real, measurable shortage of physical silver. This year alone, global demand has pushed silver prices to fresh record highs as investors, industries, and even sovereign buyers compete for limited supply. According to recent data, the world is facing its fifth consecutive year of structural deficit. And when you add up the shortfalls since 2019, the cumulative gap now exceeds 1.1 billion ounces. Industrial demand is the engine behind this explosion. Silver is essential for solar panels, electric vehicles, electronics, medical technologies, and battery systems. Industries that are scaling faster than mining supply can respond. Silver production can't be increased overnight. New mines take 5 to 10 years to develop, and most silver is produced as a byproduct of other metals, limiting how much the industry can expand. This widening gap between supply and consumption is exactly what Maloney described as structural scarcity, not a temporary shortage. At the same time, the macro backdrop is pushing investors into hard assets. The US dollar has weakened, rate cut expectations are rising, and debt levels across major economies are fueling concerns about currency stability. Gold has reacted strongly, but silver has outperformed it by a wide margin, driving the gold-to-silver ratio into levels that historically signal massive upside ahead. This is where Mike Maloney's message becomes crystal clear. The disconnect between the paper market and the physical market is finally breaking down. In a world where hundreds of paper ounces exist for every real ounce available, physical scarcity will eventually dominate the pricing mechanism. And technical indicators reflect this shift, including the rare 45-year cup and handle breakout, which suggests that silver's move has only just begun. Put simply, all forces, supply, demand, macro pressures, and technical patterns are converging at the same time. Markets under this type of stress do not move slowly. They snap, they reset. And when they do, the biggest moves often catch the world off guard. That's why Maloney believes the real fireworks haven't started yet. The fuse has only just been lit.
So I had you invert it so that it show when silver is outperforming gold, this ratio is going up, not down. But you can also do the silver-gold ratio, but then the scales on the side are in 0 point something or 0.0 something. And our brains just don't work as well that way. I wanted it in whole numbers. And so the gold-silver ratio provides that. And this also, so whenever it's going up, silver is outperforming gold. But look at where it was in 2011, where it was in 1980, and then look at how undervalued it's been since from 1990 until today. It is still an extreme bargain. It is dirt cheap. Now, look at what the average was, that red line going through all through the 70s. That red line, the 2011 peak, it only visited what was considered fair value against gold all through the 70s. That was like the natural balance of the gold-silver ratio was about 30, and that's what it hit. It wasn't. There was an intraday, I think, where it hit 30, not 31.7. So this must be end of day, or maybe, it's not weekly. It's end of day. And 14 in 1980. So from where it is right now, it's saying that it should outperform gold easily. It'll outperform gold 2.3 times, and it could outperform gold by more than 5.2 times. And gold is still, I believe, a minimum of a double in dollars. And so you take this 5.2 times 2, 10.4 times, and that is the minimum. But the gold-silver ratio could easily, when it hit 14, there was a huge strategic stockpile of silver that the U.S. had. They've sold it all off. The above ground stocks were far larger than they are today. Far, far larger. Today, we are in a situation, and you didn't have, derivatives trading was very new. You didn't have hundreds of ounces of paper contracts for each ounce of real deliverable silver. The potential to blast past that 1980 peak of 14 exists. So if you're at 73 and it goes to 10, you got 7.3 times the return on silver that you would get at gold. And gold doubling that. I mean, the potential here for silver is just enormous. The thing went back to another 5 or 10 years. You would see that silver's big move from the 4s into the 20s occurred while there was a silver deficit, like there's been for the last 5 years. Then when it hit $48 in 2011, that spike, a whole bunch of people went out looking for silver. Takes a minimum of 5 years to get into production. And that's the reason you're seeing these small positive numbers. We had a deficit. The deficit went away, but there's this delay. And that delay is good because now it's saying that we're probably not going to get back into a positive situation with silver supplies until the 2030s. It takes a really high, the cure for high prices is high prices because it'll bring more to market, except to find a discovery, to turn it into a mine, and to get that ore above ground and refined into bars takes 5 to 10 years. There just isn't enough. There's not going to be enough for at least until the end of this decade. And that means super high prices. When you go to that market balance less exchange traded products, that's 7 years of deficit. If this chart started in 2019, that bar right there would start, the top of it would be at the zero line. The only reason it's above, because that year is a down year. The line that connects any of the two bars is the close of one year and the opening of the next year. And so if the data started in 2019, everything would be below the zero line, and that would place 2025 down and 2025 isn't over with yet. That was a projection that we saw, and the demand has increased. By the time they've got the final data, 2025 is going to be a much larger deficit because of all the investment demand that is happening right now. Those projections are always like a month or two behind. So they made those projections before the rush that is happening right now, before silver broke into all-time highs. If you started this in 2019, it would almost be 1.2 billion ounces of deficit cumulatively. But when you add the rush, it's probably going to be more.
We are watching a once-in-a-generation shift play out in real time. Silver's breakout is not hype. It's the result of structural imbalances that have been building for years. And if Mike Maloney is right, the next phase could redefine the entire precious metals landscape. If this breakdown gave you new clarity into what's unfolding, make sure to like, share, and subscribe. It helps the channel reach more people who want real insight into the monetary system. And don't forget to turn on notifications so you never miss the next critical update. Question for you: boost engagement. Do you think silver's next major move will be a steady climb or an explosive breakout that shocks the entire market? Drop your thoughts in the comments. I'd love to hear your take.